Omar. I'm not going to let you off the hook.
Yeah.
How can SaaS founders measure the success of their brand investment?
It's tough, like it used to be that you could do surveys, and surveys are expensive and they're time consuming. And one thing that I used to do when I was at Profit, and a lot of sort of Fortune 1000 companies would ask this question, and they would say, "Don't make us do a brand survey." And so then we could look at other things that, okay, let's not look at surveys, let's look at cheaper tools that can be an indicator of your brand's presence. So we were looking at two things: how many people know about you, and when they know about you, do they know what you do?
Hello, everybody, and welcome to the SaaS Builder Podcast. I'm your host, Randy Wootton. Today, we're going to discuss why SaaS companies should spend more on brand versus demand marketing. Joining me is Omar Akhtar, the founder and principal analyst at Benchmarker, which is a research and advisory firm that helps B2B marketers understand industry performance through comprehensive primary, quantitative, and qualitative research. Their expertise lies in compiling specific performance benchmarks across various marketing channels, budgets, and practices. I had the chance to meet Omar at one of these CMO huddle events and was so impressed by what he was doing and what he was saying. It was super provocative. And so super grateful to have you on the podcast. Welcome, Omar.
Thank you so much. I'm really excited to be on today, Randy.
Yeah, this could be fun. All right.
Yeah.
So now, yeah, I've been in B2B marketing for a bunch of years. I was used to sell to marketers for a long time, go to market tech, sales tech, marketing tech, ad tech. I've been trying to win in the B2B marketing game for 25 years. And there's this great debate in terms of demand gen versus brand and how much you should spend. And so today we're going to get into that topic, but can you just help start us out by describing what the current mix looks like? Like in your experience, what's the average split of marketing dollars on brand building versus demand creation activities versus more of a demand capture investment for B2B?
Yeah. So let me just start off by saying that I don't have a dog in this fight, or at least I didn't start off having a dog in this fight. I'm a career researcher, journalist, and then analyst, and now I head up my own research firm. So my job was to find the answers and not really sort of come in with my own bias. And so I'm really coming at this by looking at what I've seen out in the market. I ran one survey last year, and I'm running another survey, and I did another one at the beginning of this year. What we found was that on average, it was falling to about a 40-60 split on average in favor of demand generation. But, and this is why I started Benchmarker, which is that the averages lie. When you look at everything as an average, it's a lie. If you break down those averages by a few different factors, then you start to see some very telling differences. And so the first thing that I did was that I separated the companies that hit their revenue targets versus companies that didn't hit their revenue targets. And I even looked at companies that overperformed with their revenue targets. And one clear difference emerged, which was that the companies that were exceeding their revenue targets were spending more on brand than they were on demand. And that was pretty eye-opening to me. It wasn't by a ton, it was by about 5 points, but it was enough for me to look and see if I could replicate that. And so that was my finding last year. I posted about it on LinkedIn. It was my best performing post, and everyone, on one side, everyone who felt validated took that and ran with it.
Right.
On the other side, everyone was just like, let me see your numbers, man. Where'd you
Right.
get that from? So healthy skepticism, I invited it. So I decided to see if I could replicate it this year. So I ran another survey this year, at the beginning of this year, and I found I wasn't able to replicate that the companies who exceeded their revenue targets spent more on brand versus demand, but I was able to find out that they spent pretty close to the same amount. If on average, if you look at all B2B SaaS companies, it's about a 40-60 split. If you look at high performing companies, it's closer to about 45-55 or even 50-50 split. And so that was telling to me. What's more telling is that the companies that didn't hit their revenue targets, it was like 35-65 split in favor of demand generation. And
Wow.
so that was actually way more eye-opening, is that the companies that weren't doing well were over-indexing on demand generation. And that's something that's worth delving into.
So, Omar, thank you for that high level overview. Just to maybe back up one step, so you've
Mhm.
done two surveys. What's the N that you have for
Yeah.
the surveys,
Mhm.
and how does that split? Because our target market is really people that would be listening are early stage founders. Call it, maybe $1 million in revenue, probably up to about 40 million versus a large enterprise. So, can you help us just
Mhm.
contextualize the survey and if your N and participants changed from last year to this year?
About the same. It's about 250, give or take a few respondents that I usually get. And if I look at the companies that exceeded their targets, I would say it was fairly even. I think maybe it was a 60-40 split in favor of companies that exceeded their target or hit their targets versus companies that didn't. And I try to get a decent mix of companies from kind of the 0 to 10 million annual revenue all the way up to about 2 to 3 billion. Beyond 2 to 3 billion, it's really hard to get those figures. Those execs aren't sitting there taking my surveys. And also, they're a lot more complex to kind of lock down those numbers. But if you're in, I would say my data serves companies that are right in the middle of that really well. So if you're in the 50 to 250 annual revenue range, I've got really solid data there for you.
Great. And did you have any? I'm sure you asked the question what their end market was that they served. Did you notice
Mm-hmm.
anything in terms of the vertical markets and the difference between media companies, CPG companies versus pure tech companies, manufacturing? Like, how did
Mm-hmm.
that play out in terms of the verticals?
That weirdly enough, the differences that you see in spending, there's a couple of different factors. The type of SaaS that you are doesn't make a huge difference, except for whatever reason, somebody please enlighten me on this, cybersecurity
Mm,
and health tech. Cybersecurity and health tech are weird beasts, and I almost don't like serving them because they throw all my numbers off.
right.
Cybersecurity, especially because their spending is, it's, you could say that they're very brand heavy in what they do, but their brand building comes not from digital efforts, but from events.
Oh,
So that's the way that they're sort of classifying their brand building activities. And then healthcare, it's almost like too much in favor of brand almost and not enough demand. And so that's the biggest difference that I saw. But if you look at things like the majority of my respondents are, if you look at go to market tech, sales and marketing tech, if you look at IT ops, if you get cloud based services, they all operate in fairly the same manner, which is that it's a sales led motion. They're in a fairly well defined category. And so they have to spend a decent amount to get their name out there. And so I wouldn't say the type of SaaS makes a difference. The type of customer you're selling to makes a big difference.
hmm.
So if you're selling to SMBs or even mid market, you can afford to spend, on demand generation and you can kind of get there. But once you start selling to the enterprise, your brand spending becomes way more important. And you see this play out is that I saw the expenditure on brand go from around 15% of the total split to coming to close to like about 18 to 20%.
So, do you have any hypothesis for why that's so? That what basically you're saying, and obviously you're capturing the data that of companies saying what their target was, what they
Mm-hmm.
actually delivered in terms of the revenue. So, if you're doing a
Mm-hmm.
year-end survey, you're getting their full
Yeah.
reflection. And I know the last 2 years has been hard in B2B SaaS in particular. So it
Yep.
doesn't surprise me that a lot
Mm-hmm.
of companies probably weren't hitting their target. But
Yeah.
then the subset of that is in your marketing spend, and I guess it's inclusive of all spend categories, events, influencers, paid,
Mm-hmm. Mm-hmm.
brand building. You split it into two categories: brand and demand gen, effectively.
I measured in two different ways. One was I asked a question about devoting your resources to brand, and I defined brand as roughly in sort of the crudest way things that don't result in a direct follow-up action.
Okay.
And then demand was everything that results in a direct follow-up action, clicks, shares, conversions, whatever it is. And then I also asked a question about sales enablement, which is not really brand or demand, but
Mm,
marketing helping sales, post-purchase selling, or post-purchase engagement, which is, after they've bought, what are you doing there? That's not quite brand, that's not quite demand. And then I also looked a small subsection of just account-based marketing as its own sort of thing. So I kind of broke it down, if you will, along the funnel, where like how much are you devoting to each part of the funnel, top, mid, bottom, post. And that's the way that I looked at the spending.
which is so interesting to me because I know that it often feels like, oh gosh, we don't have the pipeline we need or SAOs. Put more money in search.
Yeah. Yeah.
So, help us understand what are some of the misconceptions SaaS founders have about balancing brand and demand spending? Like, what is the key insight here for if you're an early stage company, how to think about that balance going forward?
Yeah, absolutely. I think the biggest disservice we've done is that mantra that if you can't measure it, you can't improve it,
Right.
I had the real privilege of my last company was Profit, and Profit's president was the great David Ocker, who's the godfather of brand. And I was a skeptic on brand. I was a tech analyst, and to me, demand gen was everything. But he was very bold, and if you read his writings on it, he's very bold about saying that, look, some things you're not going to measure. You're not going to measure them quick and maybe you'll never measure them, but they are long term and they are intangible and they are beneficial. And so once people start to get that, around there, once they're able to sort of get through that, it gets easier. I also think that if you look at B2B SaaS, there's kind of an over indexing of a few types of people. There's finance people, there's engineers, and sort of the creatives come right at the end of that story. And so when you're coming from a finance background, it's like, well, everything is measured, everything is a number, everything is quarter by quarter. And so when you are not able to talk with any clarity about those things, you tend to over index on focusing on the stuff that can be measured, which is your clicks, your
Right.
shares, your conversions, right?
Right.
And so it's not that the stuff everything has an effect. Everything works, is what I always tell everybody, but you only focus on the stuff that you're measuring. And that's really the biggest misconception. The second one is that brand is all the kind of the fluffy stuff, which is the logo and the colors and the ads and this, stuff like that. It's like, no, we are selling a product. If the product is good enough, it will sell itself. And
Mm.
that's just not true. What I'd love to sort of see is that if you look at sales and marketing, and if you're in sales, it's pretty well understood that sales is a numbers game, right? Like you put in the reps, you put in a lot of reps, you'll get your number. And so people understand that intrinsic that yeah, you got to do a lot of
Yeah.
calls, emails. People don't say that about marketing, but
Mm.
marketing is also a numbers game. People think that in marketing, if only you were the right kind of Steve Jobsian genius, we would be juicing our numbers right now.
Mm.
But in marketing, it's still a numbers game, and that numbers game is brand awareness.
Hmm.
The more people know about your brand, the more people are likely to, a subset of those are going to buy from. That's really all there is to it. So that's really what I tell everybody is that if you're going to think sales is a numbers game, marketing is also a numbers game.
I just think the hard thing of having gone through this with Maxio being a new brand that we launched in
Yeah.
2022 on the backs of
Mhm.
two very strong brands, SaaS
Yeah.
Office and Chargeify, and we've gone out and tried to do brand awareness surveys, which are hard to do and often very,
Yes.
very expensive. We worked with
Hmm.
Winter, who was able to help us come up with a different way of doing it. Was like, do you get enough people providing enough feedback on your brand to know if it's
Hmm.
resonating? So I do think it's hard to measure. But to your point, problem with digital and I think online companies in particular is it's all about you get what you measure, right? You get
Yeah.
what you
Hmm.
inspect, and so everyone's defaults to that. Number two is brand is more than the fluff. I think the third point is really it takes a while to impact brand. Where
Yes.
search is, it feels like you put money in and you can see you start to hit the
Mhm.
efficient frontier. You can pull back, but it truly, as we know broadly, inbound is more effective and efficient. And
Mhm.
so if you build things like SEO content and you work on events and influencer strategy, you're going to have a more efficient marketing engine over time. But
Yeah.
it's hard to trust that.
And it's also another thing of sort of initial success bias. When you go from 0 to 1 with your ad spend, you see such incremental results, right? Even that first LinkedIn post that you do, it's kind of people are on a high. Like I got like 100 people viewing that, and they keep trying to replicate that high by putting more money in towards the things that drive clicks. It's just the returns start diminishing pretty quickly. So I sympathize. It's hard to get away from that.
So let's talk about the fact. I think my marketing demand gen guy came to me and said, "Randy, we need to be spending more on brand." I was like, "Really?
Hmm.
Tell me more." And he was
Hmm.
talking about the recent trends in gen search and impact of Google and their bias to branded keywords. Now, that's always when you look at Google, you kind of raise an eyebrow and say they're just trying to figure out how to get more share of wallet.
Yeah.
But how has those recent trends changed the way B2B marketers should think about brand versus demand investments going forward?
Yeah, yeah. I think a lot of the stuff that's happening with Gen AI and Google is a lot of noise, tactical noise. But I think if I were to really simplify it down to just what do you have to do? What's the thing I have to do? Um, Brand spending is about one thing, which is getting on the short list. Getting on the short list, then you start looking at the things that will get you on the short list. Paid search will get you on the short list. Showing up in ChatGPT will get you on the short list. But more than that, link being kind of talked about on LinkedIn will get you on the short list. Being talked about in CMO communities or
Mhm.
executive communities, conversations. I've had so many execs say that when I want a new tool, I just ask like my peer,
That's right.
and they'll just tell me,
Peer
right?
references, G2
Yeah,
sometimes, but yeah, no,
yeah,
absolutely. It's your
right,
network because it's so overwhelming.
exactly.
But yep.
Yeah,
Mhm.
those are things you can not measure very effectively with a lot of tools. And surveys won't measure that very effectively either. But what it what you can do is that if I put enough of a measurable effort towards showing up in those things, getting that'll likely increase my chances of getting on the list. That's how I would think about spending on brand. And then spending on demand is I would focus on everybody that has gone through that initial stage, and now I need to capture them. This is where I can start to spend on retargeting, on email nurture, on gating content, or ads that lead to a specific landing page with a click. Things that are more expensive, but you get more bang for your buck. So you have to figure out how to spend it more efficiently there.
Okay, Omar, I'm not going to let you off the hook.
Yeah.
How can SaaS founders measure the success of their brand investment?
Yeah. It's tough, like it used to be that you could do surveys, and surveys are expensive and they're time consuming. And one thing that I used to do when I was at Profit, and a lot of sort of Fortune 1000 companies would ask this question, and they would say, "Don't make us do a brand survey." And so then we could look at other things. That okay, let's not look at surveys. Let's look at cheaper tools that can be an indicator of your brand's presence. So we were looking at two things: how many people know about you, and when they know about you, do they know what you do? This is where you start to get very specific about, if you look at websites that are associated with your category, are you showing up on those websites? Communities associated with your category, are you showing up there? Events that are associated with your category, are you showing up there? I wouldn't say large brand surveys, but spot surveys. So if people came to your booth, or you were at an event and you ran a spot survey of everybody that showed up at your booth, and say, tell me, what does Maxio do? And if over 50% people can tell you exactly what Maxio does, that's a pretty good estimate of, okay, not only do they know us, but they know what we do.
Mm.
I would focus on just those two things, and I would try to look at all the channels where those two things appear, and not go, if you have the money to do a brand survey, nothing like it. But if you can't do those things, this is the way that I would tactically try to figure it out.
So it's interesting about the qualitative survey at events. We
Yeah.
found, as I mentioned before, that when we were at events, we would talk about Maxio and people didn't know who we were. But then we would say, oh, the legacy SaaS Optics and Chargify. And they go, oh, yeah, I know Chargify. Now, both of those brands
Yeah.
had been in the market for 12 years. So we actually went back and resuscitated some of the brands to have that brand association, even in our booth. It was, have Maxio and then have the SaaS Optics and Chargify logos there. So people would look at it and say, oh, well, you must have something to do with Chargify and SaaS Optics. The other
Yeah.
issue that we bumped up against was both SaaS Optics and Chargify were descriptive, meaning SaaS Optics is about SaaS operating. Now, granted, it does invoicing. Chargify, you would assume, is about charging or subscription management. Maxio,
Yeah.
no one knows what that means. So we are working both against new brand and brand that's not descriptive. And, breathing life into a new brand is really hard.
Yes. It is really, really hard. It's one of the reasons why I chose Benchmarker. I'm like, how can I be as on the nose as
Right.
possible?
Right.
It's tough and takes longer than most people think. And this is what I think, if I could yell this to sort of investors and VCs and PE funders, like, look, it takes a while to build your runway where people know who you are and know what you do. And you have to, and that's not going to be something that you measure every quarter or even every year. That's like a long-term thing that you look at. But once you build it, it lasts a long time, and it gives you a lot of air cover, even when your product is going through problems or your user experience isn't quite there. It gives you a ton of air cover that you can't quantify.
One other thing you were alluding to in the last comment was about measuring the different channels. And I know that this attribution battle is one that we've been fighting forever since I started 25 years ago. Last touch versus first touch. How do you weight the different channels? At Maxio today, we're using Dream Data, and it is informing where the influencing is happening throughout the funnel for specific opportunities. Do you have other suggestions for early stage founders in terms of how they think about measuring attribution? And because it's so easy to just say, well, search, they came through on the click, and so that's where we should put more money.
Yeah, for early stage founders especially, I kind of tell them to leave attribution in the bin. It's because I feel like, and I'm an early stage founder. I don't really care where things happen from. I have an idea that if I put in the effort on all of these channels, there will be a cumulative effect. And so while, for example, I know that LinkedIn gives me my best bang for buck, but that doesn't mean I'm going to turn off sort of email nurturing. It doesn't mean I'm going to turn off doing videos. Everything is such an experiment when you're an early stage founder. You should do all of the things as much as you can. If you want to just focus on one channel and that's your play, just do that. It'll have an effect. When you're early stage, everything kind of works and everything kind of doesn't work at the same time. So attribution is kind of pointless. I would say that once you start getting close to about the 50 to 100 million annual revenue range, where you've got different channels and you've got $1 to spend and you have to distribute them, that's where you start to look at historical data and say, look, our customers are on these channels. We should put aside this on a new emerging channel and just test this budget. That's where you can look at historical data. You can look at benchmarks to say that, okay, how are other companies like us, distributing their spend? And that should inform some of your decisions about where you go. But I'd waste a ton of time in kind of tracking all the way to revenue. You should track the performance of your marketing on those channels, conversion rates, views, engagement. But all the way to revenue is kind of it's a fool's errand. And the bigger you get, the more successful you get, the harder it gets, and the more kind of pointless it gets. So when you're really small and when you're really big, attribution's pointless. In the middle, you should kind of try to see what's working, but not all the way to revenue. I think that's just kind of chasing a ghost.
It's a sort of a false errand because you don't have
Yeah.
enough data. I do think your point is once you have enough historical data and if you're tracking it, one of the things we do as a recommendation is as we close or we engage with prospects, even before we close them, we ask where did they hear about us? And they will often
Yeah.
say, so what we find, for example, analysts, we have all sorts of analysts that want us to invest in them. Gartner, Forrester, IDC, I don't know, one a week calls me. But
Mhm.
really, when we talk to our prospects, it's G2, or it used to be G2. Now,
Yeah.
I think a lot of it's happening within the Gen search.
Mhm.
People aren't going to G2 because the Gen search is doing the overall overview and providing enough information in their results. And you're seeing that, I think, in G2's volume.
Mhm.
Just falling off the cliff. I mean, I love those guys, but it's really interesting. That channel, which has been so influential for us, is now
Uh-huh.
going through its own existential crisis in terms of what it's going to be. And,
Yeah.
we need to figure out how do you get in front of people through Gen Search and other channels as well.
Yeah, it is a bit of a black box with Gen Search currently at the moment. My hunch is that the stuff that you've done historically is still the stuff that works. It's if you publish good content, if you show up in forums, if you show up in in search and SEO, that is the bulk of it. I think review sites are definitely going through their own sort of crisis right now. But again, I would say that look, your customers, you've got to have really, if you,
Mm.
for example, I saw this really funny LinkedIn post that if you ask a marketer to tell you where they found you from, they'll give you like a whole background of all the channels they touched. If you ask an engineer, they'll say ChatGPT, and they won't say anything about everything that happened before that.
Right.
And all of it works. Even then, I don't think you'd sort of make the assumption is like we got to go hard on that one channel that they talked about. All of it kind of works, but it's one of those things where it's like, okay, it's good to know that this is also working.
Okay, that wraps up this episode of the SaaS Builder Podcast. Thanks to Omar Akhtar, founder and principal analyst at Benchmarker, for being my guest. If you'd like to contact Omar, you can find a link to his LinkedIn profile in our show notes, or you can visit his company website at benchmarkerdata.com. If you'd like a summary or list of links mentioned in this podcast, or if you're interested in being our next guest speaker, please visit saasbuilderpod.com. And if you're a SaaS builder who needs help simplifying recurring billing or streamlining your subscription management, come visit us at maxio.com. I'm Randy Wootton. That's it for today. And until next time, remember, there's always a path to unlock your next stage of growth.